Hey guys, Mark Flockhart. Today we're going to talk about the things that insurance companies don't want you to know. And so I made a list of all the things that I think that they don't want you guys specifically to know. There's kind of some cheats and some tricks. And I'm not telling you that you should be doing these. I'm just going to go over this so you can kind of see some of the things that I've seen over the last 10 years of selling car, home, and umbrella insurance. This is personal lines, as we call it. So the number one thing, I'm just going to start off with the best. I'm going to give you the gold right up front. The number one things that car insurance rates you on is your liability portion. Because back in 1927, as you watched my other video, that's where insurance became mandatory, right? So that was the reason is you had to carry it. Well, there's different levels of risk. So let's just say in an insurance company, there's 5 levels. We'll say level 1 is the lowest person. 16-year-old driver, had an accident, had a ticket. Almost nobody wants to insure that person. So then level 2 is the next person up. We've got a 25-year-old driver who does have a ticket and accident. And then we've got a 30-year-old driver who doesn't have a ticket and accident. Then we got a 50, it keeps going. When you get closer to your 80s, that kind of comes back down and that risk goes up. So what's happening is that liability portion is being rated against. So what kind of liability do you need versus what kind of liability limits do you have? I hope I'm not losing you because it's a little bit tricky. And I'll just tell you the quick answer in a second. But what it does is that liability risk, so your state has what's called a state minimum liability. So whenever you call an insurance company and you have a junker car, you're asking for PLPD, personal liability, and property damage, because most states require you to carry property damage. So when you're saying I want just PLPD, they might ask you, well, what liability limits do you want? That determines your risk, not what you're going to pick, but what you already have. So if you have a higher liability risk coming to an insurance company, it's a lower risk because you've already proven that you're responsible enough to know that you want a higher limit to protect you better. Typically, when somebody has the 100/300, and if you don't know what that means, I'll link my video 101 on understanding that. But when someone has that 100,000 a person, 300,000 per accident coverage, then that will give a lower risk to the insurance company. In turn, that will typically save you a lot. In some states, it's hundreds of dollars. So make sure that when you're doing this, that you're carrying the right liability limits. So the second thing that the insurance companies don't want you to know specifically is when you have comprehensive and collision. So comprehensive and collision are really good things, but most people don't realize that comprehensive is almost nothing. It's really cheap to have, so that if you hit a deer or have glass damage or someone steals your car, it's good to have that extra coverage. Yes, if you're driving a clunker car, it might be cheap to have, but it's almost worthless to use it. So what I've personally done is I carry just a low deductible in comprehensive. I have a $100 deductible. Not necessarily because I think I'm going to claim something at $100, but if I do hit a deer, it's less I have to pay out of pocket. And the reason I do that is it's probably only costing me like $3 to $5 a month to lower that limit to $100. Collision's the opposite. So collision's where the risk is at, right? If you are at fault or not at fault, if you're in an accident, it doesn't matter. Collision, you've collided, then that's covering your car no matter what the situation is. Third thing is more of a recommendation than what you need to know, is because a lot of people don't know that when you need to file a claim, you should get advice. Because what typically I see a lot is these companies will tell you, for ease of use, call us. We're going to help you out the most. We'll just make it simple. Well, being simple doesn't necessarily save you money. So when you have a claim, if you hit a curb or if you hit a car or if something happens and it's pretty minor, if it's not your fault or your fault, there's a lot of things to think of. Does my state charge me for not at fault accidents? So should I claim that? Does my state charge me for at fault accident? Almost everyone does, but okay, scenario there. How much was the damage? How much was the damage of the person I hit? Are they going to file a claim against me? So if I'm going to pay for that out of pocket, I need to make sure I take the steps that it doesn't go on my insurance. Because at the end of the day, if I pay the claim and the guy calls and claims it anyways, then I'm kind of just double screwed myself. Now I've got an at-fault accident, I've paid out-of-pocket money, and then the insurance is just going to say, okay, now your rates are going up. Some states, when you have comprehensive, don't charge you more for it. So that's something to think about. Most states do. I think the only state I've really ever seen this in was in Florida. And it wasn't that they're charging different, but what they did is when they added that coverage onto their policy, it lowered the risk. So I've seen more often than not in Florida, you add a specific liability limit. So let's just say a $100 deductible, or if you didn't want it, a $1,000 deductible on comprehensive, and it actually lowered the total price. You got more coverage, but it cost you less. The fifth thing that companies don't typically tell you about, the agency that I work for tells you all the time, is if you're a renter, if you add renter's insurance to your policy, a lot of the times it's cheaper. It depends on what your price is, and this is the way I calculate it. So if you are in a state that has expensive car insurance, so for example, I'm in Michigan, we're paying $300 a month for a car, let's say, or two cars in my situation. If I added renter's insurance onto that, typically you're going to get about 15 to 25% off. So getting even 10%, right? I'm getting $30 off, and my renter's insurance most likely won't cost more than $20. So I'll net an additional $10 in savings, and I'll have up to like $1 million of liability depending on the level you picked. And now I've covered that along with my personal belongings and all that other stuff. The sixth thing that insurance companies don't typically tell you or want you to know is that they have multiple companies. That's kind of weird because Allstate owns Esurance, Liberty Mutual owns Safeco, Progressive has Progressive Direct. There's just so many companies. Farmers owns 21st Century and Foremost. So you've got all these companies. That's just four that I thought of off the top of my head that have multiple companies. Some states, because of the laws, they can't necessarily recommend that second product. And some other companies, like for example, Allstate and Esurance, I don't believe you can call an Allstate agent and get a quote for Esurance. So even though it's the same company, you're more likely to get a cheaper deal with the Esurance brand because it's more digital, it's more online. You're kind of cutting out that middleman. Not to say that the agents aren't important, but that's where your independent agents come into play. Most of your independent agents are going to work with multiple companies like that. For example, I work with Safeco. That's owned by Liberty Mutual. They're pretty much the same company. I found that they usually have lower prices. And then I work with AAA. There's AAA agents that only sell AAA, but I've got Safeco and AAA and Liberty, there's like 17 companies that I've worked with in the past at once. So you can go with these independent agents and they can typically give you a lot better deal than those larger companies. Keep in mind, I'm not telling you that you should go drop your agent if you've got a relationship with them. Sometimes it's not worth it to check to ruin that relationship. Other times it is good. So if you know somebody that is an independent agent, if you don't know an independent agent, I'll put a link below. Feel free to fill out a quote with me and I'll send it over to one of the agents that I work with. Another thing that insurance don't typically tell you or want you to know is home or renter's insurance. Sometimes adding more coverage is cheaper. So with some renting companies, I've seen this happen quite often. A lot of companies will quote you $15,000 for property damage. That's like your TV and your couch and all that. We typically standardize to $25,000. Well, a lot of the times if I put you to $30,000 or $35,000, the price doesn't change at all. So you get those additional benefits at no extra cost. The ninth thing that other companies don't want you to know, and this is kind of one of those tricks that some people play on companies, but there are some companies out there that don't require that you've had insurance for a specific period of time. So some companies only require that you just have had insurance. The ones that I work with aren't this way, so we probably wouldn't be the best fit for you here, but I have seen in the past with other companies I've worked with, as long as you've had insurance for a day, they give you that full credit of having prior insurance. Most companies require that you've had at least 6 months of prior insurance to give you that prior insurance discount. And this is a huge discount. This can cost you hundreds, if not more. I've seen this, like you could get denied in some states completely just for the fact that you don't have prior insurance. We typically aren't the best fit for you because our rates are too high when you haven't had them for 6 months. And what we do is we refer you over to a different company that is better with those rates, because ultimately we want you to get to the place you want to be. We hope that we're the right ones for you and you're for us and we're for you, right? We're a fit. And that's great. But if you're not, at least we can get you to the right place. And the last portion of things that insurance companies don't want you to know is more of a teaching point for agents. So a lot of agents don't understand this. And I even came across this recently. I replied to a Reddit post that said, hey, I own a property. I have my house and I own a property next to it. And because there's a fence on that property, or there's like a shed or something that's not a home, it's just an item that's a physical thing on that property, insurance is telling me I can't insure the liability portion. That way, if someone comes on there, falls, something happens, they want to make sure that they're not liable for that. The insurance will pick it up. I replied my answer and I said, okay, here's what I recommend. And I actually had a couple agents kick back and say, no, 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 you can't do that. It's because there's a fence on the property. They can't insure it. Well, my suggestion to the person is talk to your agent, have them call the underwriter, because you as the customer don't have access to their underwriter. It has to go through the agent. And so they called the underwriter and it was completely okay. They wrote them a liability risk because at the end of the day, the yes or no person is that underwriter. What they do is they assess the risk and determine if it's worth what they want. So in this situation, this person had a home and probably auto with them. I don't know because I was just answering it freely. And they said, sure, why not? This is a good risk. They probably didn't have any claims with us. They've probably been with us for a couple of years and they're a good client. I don't see any reason why we wouldn't insure that as a risk. So that's kind of a trick that a lot of agents, I hope you guys learn this if you're agents, is definitely don't throw anything out. Talk to the underwriters and kind of learn what they will and won't let you do. And that way you can ultimately serve the customers better. Anyways, guys, I hope this was helpful. Share it with anyone that you think would get a good advice out of this. If you liked it, give me a thumbs up. Let me know in the comments below, what are things that you have found that you think people are missing that they could get extra discounts or extra advice from that would help them with their insurance. If you want to be part of the group, I'd love for you to subscribe. We're just going to help you guys as best I can, ultimately getting you better prices, giving you more insurance. I will see you guys in the next one.